recording. Let's get ready to rumble! I don't know, probably. Alright, nobody here yet. Let's get this party started in here. Let's get this started in here. Let's get... Brandon! How's it going there, Mr. Brandon? How are you doing tonight? Why? Irresistible. Why an irresistible? J. Brad, how you doing? Fred Bopti, is that right? Bob Pitts. Okay, cool beans. Bob Pitts, how are you tonight? We're just getting here, just getting started. I mean, literally just getting started. Okay? Hardly anyone here yet. Lisa, how are you doing? Hello, Professor. How is the family? You know, I was hanging out with the family all day today. My son got some storm damage. Remember that hurricane that went through Florida a couple weeks ago? Got some storm damage to his house, so we had to replace part of the ceiling in his bedroom. So that was fun. Got to do that today. My little buddy didn't want to go swimming in the pool with me, so it is what it is. Isaac, how's it going? Ozzy. I love a name like Ozzy. That's cool. Schmuddy. That's Schmuddy. Alright, Schmuddy is here. Alright, so are we ready to roll? It is August 17th, 2024. Officially, week is done and over with. I believe it was the seventh week of the third quarter. Rude Dude, what's happening? Good evening, Rude Dude. Alrighty. Oh, yeah. Seventh week of the third quarter, done and over with. We start week 8. Week 8 of the quarter next Monday. This coming up Monday. So the funny thing is, there's only 13 weeks in the quarter. We're already more than 50% past. Already more than half past the third quarter. Hey, Doc, what's happening? Ooh, I gotta turn my screen around. Thank you, Doc. Forgot about that. This way people can read my shirt. That's a no, and what the hell are you thinking? Anywho's. Yeah, Doc, it's been about a whole week. I haven't talked to you all week. You must have been some kind of fun. You don't want to talk with me. Alright, it is what it is, Doc. I get it. You love the shirt? You know, I forget how much they are, but I'm working on getting the link into the somewhere so you guys can buy them too, if you want one. Oh, I think they're cool. First timer, Medallion Sports Investment. How are you today? Medlin Sports Investments? Cool. Tesla calls killed this past week. Well, use your 9021. Cool beans. I'm happy that you made some money with Tesla. Okay, so officially at over 130 people. Cool, so we can get started. My name's James. This is Dividend Stock Talk, where I show you what I do to get a safe, predictable, consistent 1% per week. The trading strategy is pretty simple. It was created for a 9-year-old little girl when my daughter was 9 back in 2008. She said, "Daddy, can you teach me how to trade too?" So, my challenge: how do you create a trading strategy for a 9-year-old? Because you know, 9-year-old little girls a little different than a 9-year-old little boy. Because I had boys and I had girls, and yes, she was a little challenged. But anyway, needless to say, it had to be simple, safe, predictable, consistent, and no way for her to lose. That's the 5 challenge I had. Okay, those 5 criteria. So, rule number 1. Never, this was from my daughter, and I remember this is Dad talking to a 9-year-old little girl. Rule number 1, never buy something you do not understand. If you don't understand the company, if you can't give me a 15-second elevator pitch why you bought it and why you think it's a good investment, well then don't buy it. Don't ever buy something you do not want to hold long term. Rule number 1, never buy something you don't understand. Rule number 2, never sell at a loss. It defeats the purpose. Rule number 3, make sure the company is consistently profitable. How do you do that? Well, you bypass all of the crap, all of the, what do you call those? Hold on. fundamentals. You eliminate all the fundamentals and go right directly to the dividends, because a dividend is the profit portion that the company gives to their investors. So it is in the company's DNA, so to speak, is a portion of every penny that comes in goes toward the investors. So if that increases every single year, okay, now I like 20 years. Every single year, that means the company has to be consistently profitable. Okay, so never buy something you don't understand, never sell at a loss, make sure there's plenty of increased dividends, and fourth, make sure it has weekly options. See this right here, 23 August, well that's this Friday coming up. 30 August, that's the next Friday. 6 September, well that's 2 Fridays away. 13 September, well that's 4 Fridays away. Every single Friday allows me to do a covered call every single week. And that covered call is what gets me 1% per week. Okay, somebody wants to take a look at Intel. Tony, give me a little bit and I'm going to get to it. All right? So, finishing up the what do you call those disclaimers and all that kind of nice, in the information. Okay, the information. All right. So, let's go quick again. Never buy something you don't understand. Never sell at a loss. Make sure the company has increased dividends consistently. I like 20 years. Weekly options. I want to get a paycheck every single week. I am used to getting up in the morning, first thing Monday morning, going to work and getting paid on Friday. Okay? Sorry. I grew up that way. Go to work Monday morning, put a good effort in, get paid Friday afternoon. That's kind of what I'm doing. Right? I want to take most of my trades are done on Monday and Tuesday. I collect a premium, which is usually over 1% every single week. That averages over 50% a year, and that's probably what attracted a lot of you people. You like 50% a year. Well, great. Well, it's not going to come for free. You actually have to put some effort into it. And and if you ever seen one of my videos, hey, this is James from Dividend Stock Talk, brought to you by the 10-Minute Trader. Now, this trading strategy was created for my daughter, and it had to be 10 minutes or less. It had to be simple, safe, predictable, consistent, all that. But it had to be less than 10 minutes. How do you hold the attention of a 9-year-old little girl? Well, I wanted to get 10 minutes. That's it. Okay, so great. Decent company, consistently profitable, and make sure the numbers work. So rule number 5 was make sure the numbers work. Dennis, how are you? Welcome, Mr. Dennis. Okay, so you collect all these different companies. Now there's over 9,600 companies available that you can choose from any day of the week. Actually, it was 9,598 last week. So let's call it 9,600. That's a lot of companies to go through. Okay, what do I'm looking for? 20 years of increased dividends, weekly options. Well, if you take just those 2 criteria, just those 2, consistent increasing dividends for more than 20 years and weekly options, that eliminates 97% or close to it, 97% of all the other companies. Hold on, let's bring up the calculator and find out exactly what we're looking at. 300, whoops, divided by 9,600. 0.3. Yeah, go, 97%. So, consistent increased dividends, 20 years of increased dividends, and weekly options eliminates 97% of all the other stocks. So just 3% of all the stocks available in the stock market have increased their dividends every single year for 20 years or more and have weekly options. That's my 2 criteria. Remember, simple, safe, predictable, consistent. It had to be simple, and I had to keep it under 10 minutes. All right. So, that being said, once you get your list of stocks, okay, the ones that you like, I put all mine into the calendar. And the calendar tells me when to look at a stock. Because I have found in my 20 years of trading, stocks have a tendency to go up in value just before the EX date. Now, the EX date, you may or may not know, is the last day the stock trades before the dividend is paid out. Each one of these little green dots behind me on the calendar, this is June 2024. Let's go to August because we're in August. That was an example I was giving last night. Okay, so here we are now in August. These are all the companies that I personally like, and these little green dots for the month of August. Okay, this week, Apple, Capital One, ConocoPhillips, Apple, ConocoPhillips, PPG, U.S. Steel, Clorox, Kroger, ExxonMobil, Emerson Electric, Hershey, Starbucks, RTX, and Walmart all had their EX or their dividend dates today. This week, week 7 of the quarter. Now, there's only 13 weeks in the quarter, so week 7 in the first quarter, well, this is what I'm looking at. Week 7 in the second quarter, well, this is what I'm looking at. It's the same thing, quarter after quarter. And I will do these stocks week 7, which is just got finished. Week 8, here's week 8. Here's week 9. And I only look at the stocks that are on this week, because 2 weeks prior to the EX date, the stocks have a tendency to go up in value. And if it's a stock that I don't mind owning, well, I have no problem whatsoever buying any one of them. You know what's interesting about this? Once you figure out what stocks you like, you put it in the rotation, okay? You put it in a rotation and you only buy it and sell it when it has its dividend every 90 days. So if I buy Citigroup, right here, C is Citigroup, okay? So you see me pointing, but right there, C is Citigroup, okay? Ford, Intel. So if I buy that stock, it goes up 1%, great. I get my 1%. Now, I usually buy 4 to 5 stocks per week. Okay, now this is just one of my lists. So I look at anywhere between 5 and 30 or 40 stocks per week. Because this week here, okay, this is the, what list is this? This is my old list. Whoops, right here, personal, old list, here we go. Okay, this is another list. Now I have, you see on the list I have, okay, companies that are over 100 years old, the dividend aristocrats, the dividend champions, the dividend contenders, the dividend kings. Okay, so the dividend kings, 5 decades or more of increased dividends. Okay, the dividend contenders, 10 to 24 years of increased dividends. Dividend champions, 25 years of increased dividends. Dividend aristocrats, 25 years of increased dividends. Okay, I have a couple other lists there too. Ooh, look at this one right here. This one, Warren Buffett's stock list. Okay, so if it's good enough for Warren, it's good enough for me. So here's the thing. Once I have figured out which companies I like, okay, there's about 300 of them. And once I figure out which ones I like, I put it into the calendar. The calendar tells me when to look at it. I'm looking for certain things. All right? Number one, very first thing I want to see when I put the stock symbol. So you put your stock symbol in the little spot where it has, this way, insert symbol here, that kind of thing. Insert symbol here. Okay, great. I put the symbol in there. First thing I want to do, let's look at Macy's. I hit the enter button. Watch and listen closely, okay? Once I hit this button, this screen is going to change. High, low, was, is, direction. Less than 2 seconds. That's the first thing I want to see is the chart. Where's the high? Where's the low? Where was it? Where is it? And what direction is it going? I can see that in 2 or 3 seconds. Boom, there it is. Oh, there it is. I remind me of a song. I love music, and every once in a while, just one word or phrase gets me, into that radio tune thing. Ooh, there it is. Okay, so anyway, this is Macy's. Now, let's get rid of this. All right. What you see up top here, those numbers, that's the stock. Okay? The last traded price, the bid, the ask, the volume, how many shares traded, the open, the high, the low, the close. So everything you need to know about the stock when it comes to numbers and the day. That was on Friday. Okay? What was the last traded price? What did it open at? What was the high of the day? What was the low of the day? How much volume was there? And what's the current price? Well, there's two different prices. There's the bid, there's the ask. Okay, what's the difference between the two? Well, look at it this way. If you go into a grocery store and you want to get a gallon of milk, somebody owns that store. That person who owns that store buys a gallon of milk, let's say it's $3, and then he sells it to you for $3.50 or $4, whatever. Okay, the difference between the bid, the ask, see, what he pays for the milk and what he sells you the milk for. Bid, ask. Same thing with stocks. What can I sell my stocks to him for, and what can I buy my stocks from him for? So it's a market maker that you're buying and selling from and to. Okay? Just because I'm buying Apple and you're selling Apple doesn't mean I'm getting it from you. No, no, no. It goes to the market maker first, then it comes to me. Okay? So if I buy something, I pay the market maker goes out and he buys it for some. Okay, so try not to get it too confusing. Alright, so if I'm buying into this first thing Monday morning, 1770. Now, I'm going to click on right here, option chain. This is the option chain. Okay, these are called strike prices. Macy's has a 50-cent increment strike price. 14.50, 15, 15.50, 16, 16.50, 17, so on and so forth. So what that means, that's the price I want to sell it for. This is what I'm buying it for. This is what I'm selling it for. Okay, now I'm doing this ahead of time. Alright, so I'm doing it first thing Monday morning, I'm buying a bunch of stock. Okay, let's say I'll buy 500 shares. Okay, so I buy 500 shares first thing Monday morning. Alright, second thing Monday morning. When I mean second thing, stock market opens up at 9:30. 9:30, I want to buy my shares. 9:30 with 10-15 seconds. It's actually really that quick. The fastest trade I ever did was 6 seconds. I put it in, buying stock, selling the option, the covered call, 6 seconds. Bought it, sold it within 6 seconds. That money goes back into my account. Okay, so here's the thing. If I'm buying at 1770, okay, that's the price I buy the stock for. The closest strike price, there's two of them, 1750 and the 18. The 1750, the stock doesn't have to do anything. It can stay right where it is and you still make your money. The 18, the stock's got to go up just a little bit. But what am I collecting? I'm collecting 64 cents. Well, 64 cents on an $18 stock, okay? Let's go, class. 64 cents, sorry. 64 cents. Okay, that's the profit. This here is the profit. This is what I'm buying it for. That's what I'm selling it for. This is my profit. Okay? Now, I want to know this ahead of time before I do it. That's what I mean. Simple, safe, predictable, and consistent. So, if I like the 18, it gave me 64 cents. Now, 64 cents, we can divide it by the 18, and that's my rate of return for the week. Okay, divided by $18 for the stock, okay? Well, that's a strike price. Let's clear that 1770. 1770, because that's the price of the stock. And that equals 3.6% for the week. So, the 18 is going for 64 cents. So if I bought it at 1770, sold it at 18, so I'm doing this all on Monday, okay? All I have to do is wait until Friday, see what happens on Friday. Okay, so if I'm buying it on Monday, 1770, I'm selling somebody the right, not the obligation. Now a call option, okay, it's also known as a stock option, a stock call option, okay? There's only two kinds of options. This is, let's say there's 4 types of options. Are you ready? There's a call option, there's a put option, there's a weekly option, and there's a monthly option. Okay? So, if I'm doing the 18, I'm collecting the 64. 64 cents is 3.6% of the stock price. But here's something better. If the stock does hit 18 by Friday, not only do I collect this, I also collect the difference between 18 and the 1770, which is an additional 30 cents. Now that's not 30 cents, it's 30 cents per share. So if you get 100 shares, well, that's 30 bucks. You get 1,000 shares, well, that's 300 bucks. It's just additional money. But you add it all up, and then you divide it out. So between that difference between the two and the premium right here, you're collecting close to 5% just for 1 week. Okay, my goal is 1% a week. So the stock has to move in this example. So what I'm going to do is I'm going to do the 1750 and see what that number is. Because at 1750, the stock doesn't have to move at all. It can, if it goes up, I make my money. If it stays the exact same, doesn't move at all, I make my money. The stock can even come down a little bit and I'll make my money. That is one of the safest trades there is. Because a covered call, first of all, is one of the safest trades. Okay? But if you're going to do one strike into the money, now let me explain that. If you take it to look at the line here, okay, you get the purple up here, you get the black down here, and the purple here, and the black there. Okay. Imagine this is the water line, okay? Okay, this is at sea level or at the money. Okay, this is once you go down, okay, to 1850, 1950, so on and so forth. That's out of the money because the stock has to move up. So you're not there, so you're out of the money. Okay, the other direction, the 1750, the 17, the 1650, the 16. The further you go up, the further in you go. That's in the money. Okay. This is out of the money, and this is at the money. Okay, it sounds a little confusing, but one picture. Okay, okay, in, out, at. Okay, don't make it more confusing than it needs to be. You only need to see something once and say, oh, yeah, okay, interesting. Okay, if it's, anyway, so, let's try the 1750 and see what kind of return that is. Okay, clear. So the 1750 at 50 cents. How can that be? That should be higher. Okay, so at 1770, I'm losing 20 cents off the top because I'm selling the 1750, so I'm losing 20 cents off the top. You take it off of here, so I'm only walking away with 30 cents. Okay. 30 cents, I'm going to divide that by 1750. Now the reason why I say 1750 and not 1770, because remember that 20 cents I'm losing, I already took it out of the profit. Okay, so I'm just using the 1750. That's 1.7%. Okay, so here's a question. Okay, and this is where that little green monster on your shoulder starts whispering in your ear. Go for the higher returns. Go for the higher returns. Higher returns means higher risk. Higher risk means, less predictability and less consistency. All right, so anyway, let's take a look. At the 18, okay, the stock has to go up, and you're making 3.6. Okay, then you get a little bit of a difference, say around 4 or 5%. Okay, great, but the stock has to go up. All right, right now it's at 1770. It has to go up 30 cents. Now it doesn't sound like a lot, but 30 cents is like 15%. Okay, so it kind of is a lot. The stock has to go up a big chunk in order for it to hit that 18. But you're getting close to 5%. Alright? You go in one strike and you're getting 1.7%. But here's the thing. One strike in, 1.7%. Well, that's more than 1%. Great. Alright? But the stock doesn't have to move at all. If it goes up, fine. That works. If it stays the exact same, fine, that works too. As a matter of fact, it's at 1770. The stock can even come down 20 cents, and I'm still good to go. As long as it's above 1750 come Friday. Alrighty, 72 questions, and somebody wants to take a look at Intel. Alright, so hopefully that explains the whole process and how to do it and how to figure it all out. So let's start looking at some stocks and get some opinions. Get some thoughts and some kickbacks, all right? So, first one on the list, Intel, INTC. It would help if I had the mouse there. INTC. Okay, so Intel, first thing I want to look at, as always, the high, the low, where was it, where is it, what direction is it going? Ooh, it's bouncing up off the bottom. Cool, I want to take a look at that. But before we do that, let's take a look at these numbers to make sure it's a contender, so to speak. It's like, are we wasting our time looking at it, or is this a possibility? Okay, so we already saw the chart. Okay, takes 2 or 3 seconds. High, low, was it, is it? All right. $20.80. The closest one is going to be the 21. The 21 is going for 36 cents. 36 cents is more than 1% on $20 stock. Want to show you the quickest and easiest way to figure that out? Here's the price I'm buying it for. $20.80. 20.80. Okay? Take the decimal point, move it over to the left, 2 places. 0.208. Well, that's 20 cents. 20 cents is 1% of a $20 stock. So the 21 is going for 36. That's over 1.5%. Well, I like 1.5%. Great. Now let's take a look at the chart, and what is the chart telling me? Because just because the numbers work, I got to make sure it's the right time. Because I don't like buying it at the high. I don't like buying it at the low. I want it somewhere in between. So let's check it out. A year ago, we were at 32.84. We topped off the high of the year, 51.14, and that was at the end of December. Okay, well, look what happened in the last 60 days. Okay, this is the last 2 months. She goes up. Here's the high way up there. Is that 37? Something like that. 37.24. There's the high. That was in the middle of July. She comes down to about 29 before she drops like a rock. So from 28.86 on the 1st, she dropped all the way down to 20.29 the very next day. So from 28 to 21, that is in 28 to 21, that's a $7 drop on a $27 stock. What is $7 on a $27 stock? Well, that's like 30%. That's a big drop. Okay, so that's a big drop. Here's the bottom right here for the 30-day period. So let's go take a look at the last 30 days. Now, why do I want to look at the last 30 days? Well, the last 30 days gives me an idea of where it's going next. Okay, here's the big drop. We can't plan for these. I mean, these just happen. They call them black swan events. When they happen, okay, fine. Okay, that means a lot of different things to a lot of different people. Now, if I'm eyeballing Intel, keep my eye on it, right? Because it is basically one of the stocks in my, let's call it repository, in my roster, in my corral, whatever metaphor you want to use. Okay, it's on my list. It's in my basket. Whatever. Okay, I do like it. I trade it often. All right. Now, when you're keeping an eye on it and you see this, right, you say, ooh, that's an awesome opportunity to pick up some extra profits. What do I mean by that? Well, you're going to make your most money in the stock market buying low and selling high. Okay, so if you're keeping your eye on Intel and you like Intel, which I do, okay, as soon as it makes this big, huge drop, first of all, I want to find out what the drop was for. Once I find that out, well, great. Now I'm looking for the absolute bottom. Here it is right here, 4 days later. Okay, once it hits the absolute bottom, now how do I know that? Well, because after the absolute bottom, you get a couple days to the upside. Okay, here we have 1, 2, 3, 4, 5, 6. 6 days to the upside from that 30-day bottom. Well, that's an awesome opportunity to jump in because you're making money buying low and selling high. You find a good company. Every single company in your roster is going to be one of those like, yeah, I'll buy Intel and hold it for the rest of my life. That's how you got to feel about it. Never buy a stock that you do not want to marry. That's an easy way of looking at it. Do I like Intel? Yeah, I like Intel. Do I like Intel at this current price? Well, yeah, it just dropped 30%. Now it's at the bottom. What do you think is going to happen? Well, it's going to go up. Okay, what do I want? I only want 1% out of it. That's it. I want to buy the 21.87 right now. Where it is, 21.87. Okay, that was the last price. Okay, 21.80. That's not a good sign. Anytime the bid and the ask, wait a second. Yeah, that's about right. 2087. No, 2080 and 2079. When the bid and the ask are lower than the last traded price, the market maker is going to push it down. Now, when the bid and the ask are both higher than the last price, the market maker is trying to push it up. He kind of gives you a clue, tips his hat. He'd give you a hint. Hint, clue, tip his hat. Yeah, they're all basically mean the same thing. He's giving you a clue. Okay? He's going to push it down come Monday. All right? If it was the other way around, he'd be pushing it up. Now, when usually the last price, the bid is usually lower, the ask is usually higher. But in this situation, the 280, I'm looking at the 28, I'm looking at the 21s, that's more than a point and a half. It's an awesome, this is just my opinion. Okay, I'm not giving advice, I'm just saying this is my opinion. This would be one of the top ones on my list for Monday. And it's already written down for next week anyway, so I just circled it. Alright, so I like that. I do. On Monday morning, I want to see what it opens up at. Okay, if it opens up positive, I'm jumping in. It's like the pool, I'm jumping in. Woo! Alright, anyway. So that's Intel. So let's do a quick trade. Alright, let's do a quick practice. Now this is just a practice account, so we're going to do a quick trade. Ready? First of all, I've already decided I like the chart. Great, now let's get rid of it. There you go, all gone, bye-bye. Now, I want to change my order because I want to do a covered call. I buy the stock and then I sell the option at the exact same time. Okay? How do we do that? We come over here to the option chain, and these are the trade, strategies. Okay? So that's just a single strategy, it's a buy call, that's all. Okay, here we go. Vertical, back ratio, calendar, diagonal, straddle, strangle, covered. That's what I want. Okay, now don't get me wrong, these are interesting, but they are extremely complex and it takes a lot more time and a lot more effort. So what I'm showing you is called a covered call. It's one of the safest trading strategies there is. Okay, it's simple, it's safe, it's predictable. Also, it has a very low rate of return. Okay, the rate of return that I'm showing you is about 50% per year, which is 1% per week. Now, these other strategies, they can give you more, but it's always best to try the easiest, simplest, and safest first. And if that's giving you 50%, well, that's your stepping stone. I consider what I do here as a stepping stone for people who are serious about taking care of their own money. Because if you get good at this strategy here, it's simple, it's safe, it's predictable, blah, 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 all that kind of nice, neat, fun stuff. It gets an average of 50% per year. Great. Once you start doing that, then you can branch out and add other elements, such as a diagonal, or a back ratio, or a vertical. It's more complicated, takes more time to perfect it, and it has more risk. Okay, so like I said, the covered call, which is what I'm teaching you, is the simplest, safest strategy there is. All right. I'm changing it to covered call. There you go. Everything changes. Now, remember we said I like the 21. Well, here's the 21 right here. See, here's the 21. These are puts over here. Okay, I don't do those. Those are very complicated. Okay, so ignore those. Hello, good evening. How are you doing? I am wonderful. Thank you. All right. I like it at the 21. These are the calls. Call option. That's what I want. Now I want to buy it at this situation. Now, this is where you're going to be most susceptible to losing. That little tiny square right there where it says buy, if I move the mouse just a tiny bit, it says sell. So if you're on the wrong square, you could be losing. Okay, and that's one of the major challenges for most beginners, if they click the wrong button. So what I always tell people, okay, my students and others, always, always, always read the order out loud so you can hear it, because your eyes can deceive you. Okay, so I'm going to hit confirm and send. All right, this is the order. I'm going to read it out loud and I'm going to explain it as I go. The very first thing I'm seeing, okay, the green line up here, that is the order. See, it says order confirmation dialog. This will tell you what the order is. Okay, and I'm going to explain it slowly. Okay, very first thing it says, buy 10 covered Intel. What does that mean? Well, that means I'm buying 10 covered calls. Now, 10 covered calls is 1,000 shares, and I'm selling 10 contracts. Okay, you could do 1, you could do 5, you could do 3, you could do 182 if you want. You can do as many as you can afford comfortably. So, that's the order. Buy 10 covered Intel. 100. What does that mean? Well, that means it's a weekly. Okay, it means every Friday. Then comes the date, 23 August 24. Well, that's next Friday. All right. The $21 call and buying Intel. Okay, this has a limit order. I usually do it at the market order, so let me change that. Market order, same thing. Okay, to open to open. See that back line? It says to open to open. What does that mean? It means there's two different trades here. It means I'm buying the stock, that's one trade, and I'm selling the option, that's the second trade. Well, think of it this way. Stocks are traded mainly in New York, the New York Stock Exchange, 9:30 a.m. Okay? The options usually are traded at the Chicago Board of Options in Chicago. So the stocks are traded in New York and the options are traded in Chicago. So just think of it that way, two different trades. All right. The next line down, this is my break-even point. Okay, so the stock can go all the way down to $20.43. That's my break-even. Well, where's the stock right now? Well, the stock right now is at $20.80. Okay, so the stock can go down and I'm still making a profit as long as it is above $20.43. Okay, underneath that is the maximum amount of profit I'm going to make off of this particular trade. Right here it says 565. Okay, well, if I buy 1,000 shares of stock, I sell 10 contracts because you have to have 100 shares for every one contract. So one contract, 100 shares. 3 contracts, 300 shares, so on and so forth. All right, this is my maximum profit, 565 to doing 10 contracts. So let's get out my calculator and we're going to do some fun math. 565, that's my maximum profit. And I'm going to divide that by the cash outlay. How much is it costing me to do this one trade? Well, this one trade for 1,000 shares of Intel is going to be $20,441. Okay, of course, if it was 100 shares, it would be a lot less. 300 shares, it'd still be a lot less. This is just to go over the numbers. Okay, so if I divide it by 20,441, that's going to give me a return of 2.7%. Now, I like 2.7%, especially when my break-even is lower than the current stock price. This is my profit, this is what it's costing me. Okay, so on and so forth. So, that was a trade. Showed you how to do it. Simple. Do not make it more complicated than it needs to be. Adults have a tendency to make things more complicated. My daughter was very good at it. It was simple. It was easy. Okay? Here's the stocks that we're looking at this week. Here's our rules. Okay? What is the chart telling me? What are the numbers telling me? It's simple. Okay? $20, move it over 2 places, what's 20 cents? I'm looking to get 20 cents. Okay? So the 21 is going for 36 cents. Well, that's more than 1%. The 21.50 is almost at 1%. Okay, so it all depends. It should be relatively quick. Okay, take a look at the chart. High, low, what is, direction. There you go. So anyway, let's proceed. Good evening there, 86. How are you? Uh-oh, I missed all these questions. How far back do I have to go? Hey, yo, Hollywood. Hollywood's in the house. How's it going there, LA Sound Waves? All right. And it made 1% on, okay. Good for you. You made 1% on LUV. That's Southwest Airlines. Do you wait on a stock like Macy's knowing that they are having an earnings report that week? J. Brad, there are certain stocks I don't pay attention to. Let's go right to the point. I don't pay attention to earnings. Really, I don't. I've seen positive earnings where the stock drops. I've seen negative earnings where the stock the stock skyrockets. Yeah, I don't pay attention to earnings at all. Sorry. 100 nay. 100% nay. Okay. Sally, okay. James doesn't care about it. Alright, Hollywood told him. Alright. Earnings report can crush stocks sometimes. Okay, J. Brad, not really. Okay? Let me show you something interesting. Getting off target here for a second, but I like doing this one because this one's fun. Let's get oh, wow. Alright. Alright. Ready to do this? Now, my assumption, someone correct me if I'm wrong, we are looking at Intel at the moment. Okay, great. Can anyone tell me why that big drop right there happened? Say it. Now, that big drop, for some strange reason, corresponds with this line down here. Well, this line down here is the volume. Alright? That's how many shares are traded on a daily basis. So, see all of them right here? I'm going to take, and the average, the daily average. What is the daily average? Holy cow. Is that right? That's a lot. Anyway, the daily average volume for Intel is 51 million shares a day. That's the average volume. Okay? Now, let's go back and find out. Crap, we can't see it. Oh, there it is, right there. The bid and the ask. Okay? The bid, 2079. The ask, 2080. Well, there's a 1 cent difference between the two. Okay? Can't argue with that. See, I like facts, because you can't argue against facts. Alright? So, 51 million shares traded on a daily basis average. Okay, so let's get the calculator. Now, we take 51 million shares. Okay? Now, the market maker makes the difference, makes the spread between the bid and the ask. Okay, what you're buying it for, what you're selling it for. There's only a 1 penny difference between the bid and the ask. Okay, so on an average day, how much does the market maker make? So we take the 51 million shares that trade on a daily basis average, and we multiply that by 1 penny per share, because that's what the market maker is making. So on a daily basis, this gentleman or this lady, whatever, makes $500,000 in a day. $500,000 in a day. But when the volume spikes up to 306 million, okay, every day averages, 500,000. Now, what happens when this spike or this drop happens? It was 303. Okay, clear. 303 million. Usually. So let's multiply this by 0.01. Okay, you see the big difference? Now, on average volume, the market maker makes $500,000 a day. Okay, some companies have one market maker. Some companies have 2 or 3 market makers. Okay, these are the people that just, all that their job is to buy and sell. They fill the orders. Hey, I want to buy. Hey, I want to sell. The market maker takes care of that. The market maker gets that 1 penny, the spread. So on an average day, the market maker is making $500,000. But what happened here? With this big drop, you got a volume spike that happens with it. This more than likely has to do with earnings. See the earnings right there? The telephone call, okay, along with the earnings. And right over here is the dividend. Okay, dividend, earnings. Why did this, now did anything, now ask yourself this question before you jump to conclusions about the market maker going from $500,000 a day to one day right here making $3 million. This is a huge difference between 500,000 and 3 million in a day. This is what he makes in a day, or she makes in a day. So you think that an earnings report has something to do with the stock going down? No, it's got nothing to do with that at all, because there's only one person in charge of the opening price of the day. And do you know who that is? That's the market maker. So, right here, you're at $30, right? Earnings comes out and the market maker says, you know what? I think I need a new house in Beverly Hills. Let's drop this thing 20%, see what shakes loose. It's got nothing to do with the company whatsoever. It doesn't have, here's an example. The stock drops. Okay, so the CEO gets on the phone and says, hey, Mary, go home for a week or so. The stock dropped. We need to cut prices. We need to trim the fat. It doesn't work that way. Okay, people in the factories, they keep going to work. People in the corporate office, they keep going to work. Nothing really changes in the company itself. This here, this crap, this is you and me. We're the ones who say, all right, this is too high, this is too low. But who does this? That's the market maker. And why is he doing it? Is he doing it because one of the factories blew up and went to the ground and now they have a loss? No. They got a report saying, oh, we didn't make as much money this year. Well, let me see if I can go get enough money to buy a new condo. Okay, so he dropped. He is the one in charge of the opening of the day. It was here. The market maker didn't have to push it down. He could have left it there and saying what happened. Okay? But no, the market maker is in charge of the opening of the day. Now, when it opens of the day and it pushes up, well, we do that. If it opens here and it pushes down, we do that. Okay, we make this here happen. The market maker does this. Okay? Don't kid yourself. We decide what's too high, what's too low. The market maker is the one who starts to move the line where we say go. Okay, you know how you go around the board, you collect $200 every time you go past go? Yeah. Well, the market maker, he sets the line every day. He didn't have to do this. He did this because he wanted to make that money, and he made a freaking bunch. Because all it has to be a rumor, hey, if the dividend, if the earnings are bad, the stock's going to drop. And if everybody believes that, and the market maker does this, what happens? Well, he just went from $500,000 a day to $3 million a day. That's a 600% increase from Wednesday to a Friday. I mean, think about it. Here's a Wednesday, here's Friday. Market maker dropped it, and it does not say whether or not those were buyers or those were sellers. But what we do know, there's over 300 million shares traded that day, all because the market maker decided to drop the price. Anyway, let's go back. I'm missing a bunch of questions. I get sidetracked every once in a while. We didn't really need to do that, so let's go back and take a look at some stuff. Angela loves puts. 86, how's it going? Splendid. Should I sell stock that may not be great yet, pays a dividend, an example, Starbucks? I honestly can't tell you what to do. I can tell you what I would do. All right? Now, I'm not telling you anything in particular, but keep this in mind. Okay? When you buy a stock, You're not getting married to it. All right, you can sell it and buy something else. As a matter of fact, taking a profit, nobody ever went broke taking a profit. And it's not a profit until you take it. Okay, if it's down, well, remember rule number 2, never sell at a loss. It defeats the purpose of buying in the first place. Okay? But I can't tell you what to do. You have to decide that one out. Real estate flipper. Okay. Real estate flippers here. Cool beans. T. Spent a lot on First Bank. Something and lost big. Okay, I have no idea what First Bank is, and it doesn't sound like something that I would buy. So I know most of the banks that I know of. It dropped because earnings came in low. I stay away from stocks when they have earnings week. I love stocks at earnings week because when this happens here, okay, and if it's because of earnings, yeah, I'm looking to buy it down here. I love when that happens because it's a perfect opportunity. Because you make money in the stock market. Don't let anyone kid you. You make your money in the stock market when you buy low and sell high. Well, if you like a good company, I like Intel. I do. Okay, and if Intel has a drop like this, yep, I want to keep my eye on it because I like Intel. I know that this is a bunch of BS. Okay? The market maker makes $500,000 a day. He sees an opportunity to 6 times his income in one day. Oh, hell yeah, let's just drop the price. Okay, so don't get me started on that. I don't like the market maker. Angelo loves puts. Splendid. Are you using Active Trader Pro? Nope. I'm using Thinkorswim. Thomas, if you're that new and careless, you should not be trading options. You're absolutely 100% correct. You shouldn't be trading options unless you understand what you're doing. Coffee Break Logistics, how are you doing? I do not think INTL is good for Monday. INTL, what the heck is INTL? INTL. Nope, it's not good for Monday. If you buy Walgreens if I buy Walgreens on Tuesday and sell on Thursday, will I get the dividend? Oh, Anthony, hold that thought for 1 second. WBA. Walgreens. Alright, if I buy Walgreens on Tuesday and sell on Thursday, would I get the dividend? Yes, Anthony, you would. Okay? The EX date for Walgreens is the 21st. If you buy it on the 20th, the day before, you qualify to get the dividend as long as you own it on the 21st, because the 21st is the date of record. There's 4 dates to remember when you're trading with dividend stocks. One is the announcement date, self-explanatory. Number 2, the most important one, the EX dividend date. That is that little green dot right there. That's the last day the stock trades before the dividend is paid out. Can you show receipts? Time will tell. I have no idea what the hell you mean by can I show receipts. I don't have any receipts handy. I don't know what kind of receipts you're asking for. Date number 3, date of record. Whoever owns the stock on the date of record is entitled to the dividend. Okay, just happens to be the same day. Okay, years ago it used to be different days. Now it's the same day. Date number 4, 4 dates to remember. 4th date, self-explanatory, payment date, when you get paid. Okay, 4 days. Announcement, EX, date of record, and then payment date. 4, okay? Let's get back to where we were. The way we were. Scattered pictures of the smile. Resets of your formula working as you are buying and selling. Oh, you want to see trades that I've done in the past. Well, I got them going all the way back to 2013. Okay. Here we go. Check this out. Dum da da dum dum. Going all the way back to January. Okay. Now this is this year. Every year I do this every single year. Okay. I start an account with 100,000 in it, and then I go Here are my trades. Week number 1. CVS, Ford, General Motors, Macy's. Purchased, executed time, blah, blah, blah. There's the times and dates. Here are the numbers right here. Okay, blah, blah, blah. Everything's right there. If those are what you want to talk about, receipts. Okay, next one. Same thing. Macy's, Ford, General Motors, Clorox, Lowe's, Ford. Okay, buying the stock at 141, selling to 141, collecting the $1.70. Buying the stock at 214, selling the 212 for 365. Buying the stock at 1180, selling the 12s, collecting 5 cents. Blah blah blah. They're all there. Okay, going oops. Okay, that's week 1, week 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, 16, 21, 22, 23, 26, 27, 28, 30, blah, 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 blah. All the way up here. And I haven't finished up the calculations for week 32 or week 31. But week 30, look at this, 3.36%. What did I have? I had MPW, Siri, General Electric, Newmont Energy, Walgreens, CVS, MPW. Okay, and that week I made 3.36. Ooh, that's a nice, yeah, all the numbers right there. You asked, there they are. All right, next. Okay, Anthony's question. 96. He was referencing the people watching his stream. That's what he was talking about. Oh, okay. And if they show, yes, if I own the shares on one day. Yep. K9, good evening. I think PLTR is a strong trade next week. Your thoughts? All right, K9, I'm going to say no to PLTR. PLTR, we looked at it last night. It was a no last night. It's going to be a no again, and I forget the exact reason. Does anybody know the exact reason for PLTR's no? PLTR. Somebody brings it up every week. Oh, yeah, there you go. There are no dividends in the selected time period. PLTR is no because it has no dividends. Okay, so the reason why I like dividend stocks is because before the dividend, the stock price has a tendency to go up. Okay, so if the stock price is going up, well, what are the trades that can get me a decent, consistent, and predictable return? Well, the covered call is the trade that does it. Thomas Berman, haha, okay, it makes more sense. So let's go back here. So sorry, PLTR is no, not for me. If you like PLTR, great, more power to you. You know, but it's not one of the stocks I follow because I can't predict it, and I can't say. Made my 1% on GY this week. Florida Electrical, okay, awesome. That's great. I'd like to, to have seen it. I don't even know what GY is. He shows, yes, basically EOD Tuesday. If you sell EXA, okay. After hour gap, okay. EBDA can crush or embellish a stock. EBTDA, I have no idea what that means. Big drop came from after earnings. Yep. Cliff, don't agree. Not a penny spread on. I don't agree. Not a penny spread on the L2. Okay, Cliff. Okay, well, AT&T has a 2-cent spread. 1932. Okay, Ford. 1051, 1 cent spread. Bro, what? I have no idea. The earnings showed major revenue regression, employee and company budget cuts, and further negative. Yeah, I get it. It's just news. Okay, you know what they say: sell the hype, buy the facts. Guidance. Eklondar. Guidance, huh? What the heck is guidance? GUI. Guidance software. Yeah. No, sorry, dude. Dividend stocks only. Thanks, 86. That's a penny stock. Yeah, PLTR is on the upside. Okay, coffee break logistics. I get it. There's a lot of stocks. It is 9,598 stocks out there. Okay, you want to take a look at one or two, fine, great. Okay, you're asking me to take a look at something when I've already looked at it and I've already said it doesn't fit in my trading strategy. Okay, so PLTR is a no. I really honestly don't care what the chart looks like. It's not doing nothing but wasting my time. Okay, now I like certain stocks. I like stocks that have increased dividends. If the company doesn't have a dividend, that means I have to waste my time reading all the annual reports, all the quarterly reports, listening to all the bullshit, and then I have no way of figuring out what kind of signal is there going to be to let me know when the stock is going to move in the right direction. Well, if a dividend stock moves before the dividend, well, the dividend tells me to look at the stock because it's going to move. It is actually that simple. If the company doesn't have dividends, well, how am I supposed to know other than watching it every single day? And why would I watch a stock every single day if it doesn't? What do you think about Cube? Yeah, no to Cube, sorry. Doesn't fit the parameters. Renee, how are you, Renee? So as I was saying, why would I add another stock to my roster? I already have 300 that do what I want it to do. Okay? Now, I grew up in a time where if it ain't broke, don't fix it. So I have 300 companies that are in my calendar. Let's go. Where is it? That is in my calendar to look at. All right? I have no problem whatsoever with any one of those companies on my list because I know who they are and I have been following. What I'm not going to do is add another that doesn't meet the criteria, because the criteria has worked so far for the last 15 years. Well, that's when I first started doing it. I showed my daughter in 2008. That's when I created it. And it just seems to be working ever since. So why would I want to throw in something that doesn't fit? It's like throwing a square peg into a round hole. Round hole is a square peg, whatever. Can you give us the rundown about the bid and ask and the market maker giving you a hint? Let me put it simply. As simply as I possibly can. Okay? The last traded price is the last traded price Friday at 4 p.m. before the market bell, before the closing bell. Once that bell goes off, no more trading. The absolute last trade on AT&T on Friday afternoon was $19.34. You can argue all you want. You can give me all different kinds of points of view. You can give me some religious speech. You can give me some kind of whatever. Whatever you say, whatever you do, ain't going to change the fact that that is the last traded price of the day on Friday. I like facts because you can't argue with them. Last traded price. The bid and the ask. The bid is what you can sell your shares from. That's what the market maker is buying it. The market maker is buying it at that price. The market maker is selling it at that price. The difference between the two is the spread. That money goes to the market maker. In this instance, $19.30 is the bid. $19.32 is the ask. That's the 2-cent difference. That's the spread. Okay, doesn't tell me how many shares traded. Yeah, well. But if, and you'll see this every once in a while, the last traded price, 1934. Well, 1930 is lower. 1932 is lower. Both of them are lower. So what is the market maker looking to do on Monday? He's looking to push it down. Well, look where it is right now. Okay? Up, down, up, down, up, down, up. It's supposed to be coming down, because that's what it does. It's like a seesaw. Remember the seesaws in elementary school? Yeah. Some people call them teeter-totters. Same thing. Seesaw, teeter-totter, same thing. Up, down, same thing. That's what stocks do. They go up, they go down. So right now, hypothetically, it's supposed to be coming down. The market maker is giving a clue. Is it guaranteed? No, but it's one of those things that's happened more often than it doesn't. All right, 1934, 1930, 1932, both lower, and you can see the stock is coming down also. So the market maker is trying to push it down. Okay. Anyway, what is your rule for buying stocks around the record date? I don't pay attention to the record date. Wait a minute. Oh, the date of record. Oh, hold on. Yeah, I try not to. I try to buy the stock 2 weeks before the EX date. Okay, so look right here. The 30th. Okay, we have Baxter, eBay, Corning, Heinz Ketchup, and Newmont. Okay, so I can pick any one of these that I like. Okay, 'cause I like them all. Okay, but when I look at the dividend and I look at the chart, I won't buy all 5 of those. We'll probably only just buy 1 or 2 if all the numbers work and everything else. But we're talking about the EX date. Okay, the EX date and the date of record are both on the 30th, right there. Okay, EX date 30th, date of record the 30th. All right. If I'm going to buy it, I'm going to buy it 2 weeks before on a Monday. Gives it plenty of time to move up. I really don't want to buy it on a Monday here coming into that, because stocks have a tendency to go down after the dividend is paid. Boeing. Uh-oh. Somebody wants to take a look at Boeing. Yeah, I missed a whole bunch of questions. All right. Can you give us... Okay, yep, did that one, Boeing. Good stable dividend, BHP. Alrighty. Thank you for that. Jim Boswell. Boeing, no dividends in years. Okay, so that's so much for Boeing. Okay, what calendar app is that? Interesting question. It's not really a calendar app. This is a trading platform. Okay, I don't know where you trade. E-Trade, E-Trade, Just a Trade. I'm drawing a blank. Robinhood, Acorn. There's a lot of places you can trade. This is just a trading platform. Thinkorswim. That is free. Please answer the question above. Feline Vine. Please answer the question above. Can you show us how to look at the chart and how far back in time do you look? Well, that's a good one. How do you look at a chart? Okay, basically, okay, a chart. Let me just turn this a little bit to get a better view. Yeah, because you bite people over on YouTube aren't getting a whole screen. So let me adjust this a little bit. Right? Move the camera. Alright, that's better. Okay, so here's the chart. Let's go back and look at a 1-year chart, because I like looking at 4 different charts. Okay, let's find, okay, AT&T. Let's make this a little bigger so make it easier to see. Okay, now, whenever you're looking at a chart, it tells you everything you need to know on the chart itself. Down at the bottom, those are the dates, the months. September, October, November, December. Okay, this is 24. This is December 31st, January 1st, right there. That's the change of the year. February, March, April, May, June, July, August. This is where we are right now. So this was a year ago. Way to the left was a year ago on this particular chart. Way over here is Friday, was the last trading day. Okay. Each one of these little lines represents a trading day. There's no trading on Saturdays and Sundays and holidays. I want to be able to develop a list of symbols to pick from. How would you do that? Oh boy. Jim. Basketballs on mutual funds around. Yeah. Okay. Jim, sorry about that. I'm sorry, Jim, you're only getting 13% a year. Yeah, I won't do that. So let's get back to this. Somebody wants to know how to read a chart. Left to right. Okay, that's furthest away. Now, if I click my mouse and drag it, That changes the whole parameter. Not by much. So my high, my low, where was it, where is it? But it's going down to the beginning of March till Friday. Okay? Then I can move it again. Same thing I'm looking at. High, low, where was it, where is it? But look at the time frame. The time frame's different now. Okay, the beginning of July to Friday. Okay, then I can even go even tighter. Okay, still looking at the same thing. High, low, where was it, where is it, what direction it's going. But now it's going from the 29th of July to this past Friday. We're always ending up here because this is the most current space, the most current spot. Now, I'm assuming you want to know what these things are. Well, these are exactly what they look like, candlesticks. All right, now let me explain them. There are four things, four numbers associated with the candlesticks. Okay, four things to look at. The wick, the top of the wick, is the high of the day. The bottom of the wick is the low of the day. Now, you see the horizontal line at the top of the wick? The top of the candle. You got a horizontal line there, and at the bottom of the candle, you have a horizontal line. Okay? On a green day, which is an up day, the bottom horizontal line represents the opening price of the day. The top horizontal line represents the closing price of the day. Okay, so she opened up here and she closed up here. She went as high as here and she went as low as there, all throughout the day. But a green day is an up day. Red day is a down day. So, same thing. Top of the wick is the high of the day. Bottom of the wick is the low of the day. But what changes is the horizontal lines. Okay? The top horizontal line is the opening of the day. The bottom horizontal line is the low of the day, which means that is a down day. So the stock went down. Green day, stock goes up. Red day, stock goes down. So that's how you read a chart. From the bottom, tells you the information on the bottom. Okay, the dates. 7:30, 7:31, 8:1, 8:2, 8:5, 8:6, 8:7, 8:8, so on and so forth. Those are the dates. This is the prices over here. That's how you read a chart. And I missed a whole bunch of questions. New to this, what is the usually start date of a quarter for most stocks? Oh, okay. Interesting. Here we go. You ready? January, February, March, first quarter. April, May, June, second quarter. July, August, September, third quarter. October, November, December, fourth quarter. The first day of the quarter is the first day of the quarter for every company. When they pay their dividend, totally different. Okay, you have 90 calendar days in a quarter, but only 66 trading days, or 13 weeks per quarter. Each quarter has 13 weeks. 1, 2, 3, 4, 5, all the way to 13. Okay, after 13 comes week 1 again. 13 weeks, week 1 again. 13 weeks, so on and so forth. Typically buys 2 weeks before. Thank you. Goodyear. Is Goodyear a good stock? Ooh, let's take a look at Goodyear. Goodyear GT. Okay, I didn't know that. GT. Sorry, it's a monthly. Now, don't get me wrong. Goodyear may be a good company. They've been in business for over 100 years. So they have longevity to their list. But they only do monthly options, which means one covered call per month, which means I can only do that 12 times a year. That's why I don't like monthlies. This is a monthly. Okay? September, October, January, April. These are the months. There's no weeklies there. So I don't do Goodyear. Does your strategy require a large amount of cash to start? I'm interested but young. The biggest challenge you're going to have when you're young and you have a small amount, the growth at first is really slow. 1%. Let's say you start out with $100. Okay, 1% of $100 is only $1. Okay, but then you have commissions and fees, and so the commissions and fees are higher. So if you have 1,000, 1% is $100. Is that right? No, that's 10%. 1,000, yeah, 1,000, 1% is $10. Okay, so it will grow slowly, but at what point will it start to balloon and start really growing faster? Well, it's always going to be 1% per week if you're right, in picking the stocks that you pick, because it's not guaranteed. Nothing's guaranteed except for death and taxes. But I like odds and probabilities. If I stick with companies that've been around for a while, Goodyear, we just took a look at this one. It's been around for over 100 years. Well, so has Macy's, so has Ford, General Motors, AT&T, Wells Fargo, Bank of America. They're all over 100 years old, but they have weekly options available. Okay, so not monthlies. Monthlies just doesn't pay the same. So I don't do them. What dividends you suggest? I don't make any suggestions whatsoever. Sean, Dividend Kings only? No, I like the Dividend Kings. TGRP has doubled this year. Jim, cool, thanks. I have never heard of them. So I don't invest my money into things I've never heard of. Now remember, this particular strategy, I told you earlier, it had to be simple, safe, predictable, and consistent. Well, simple has to do with never buying a stock you do not understand. Okay, I have no idea what the hell that company does. Okay, but I do know what Goodyear does. Well, I grew up with them. Okay, I grew up in the 60s, 70s, and 80s. All right, so Goodyear, yeah, I've heard of them. Macy's, I've heard of them. Okay, Wells Fargo, I've heard of them. Bank of America, I heard of them. Home Depot, Lowe's, Clorox, Colgate-Palmolive. Is it oil protection full storage? Yeah, okay, I get it, but I've never heard of them. TGRP. It's a no, and it's a penny stock. Oh my God, weren't you listening? Okay, dividend stocks only. I can almost guarantee with 100% certainty that a 0.003 of a cent, they're not going to have dividends. TRGP, okay, TRGP, so that's my mistake. TRGP, 142, it's a monthly, and it's double no right off the top. First no is it's a monthly. Second no is it's at the high of the year. Okay, that's not a pony I want to ride. Okay, so you're going to make your money when you buy low and sell high, not when you buy high and go wait for it to get higher. Yeah, I don't play that game. How much did I start with? Oh my goodness. I started with 12,000 back in 1980 something. Back in the 80s. That's when I first started trading. It doubled in the last year. Jim, I understand. Seriously, I do. Okay? But you're asking me to look at something that I'm never ever going to trade. Sorry. It's a monthly. The numbers just don't work for me. I like simple, safe, predictable, and consistent. I don't have the time. I'm 60 years old. I have no desire to go back to work. Okay? You're asking me to take some of my money, put it aside into a speculation company. This is pure speculation. Okay? You're buying it at a high. You want me to buy it at a high, hoping that it will go higher. Yeah, no, I don't play that game. Sorry. I wait for it to come down. Look, it goes up, came back, went up, came back, went up, came back, went up, came back, went up, came back. Right now, it's way too high for me, and I would never do it because the numbers just is an old saying. If it ain't broke, don't fix it. I'm perfectly happy with 50% per year, 1% per week. Okay, I don't have the desire to jump into something and wait for it to go higher. Yeah, no, sorry, I don't play it. If you like it, fine. If it works for you, wonderful. I'm happy. Seriously, I'm happy for you that you made money on it. Great. But that's not what I want to do. I want to stay safe, predictable, and consistent. All right, Sean, ticker symbol, please. Doing great work, man. Thank you. Can you block me? What the hell am I blocking for? I am 63 and I get 30% a year for many years. Well, great, Jim. I'm 60. I've been getting 50% a year for years. What program do you use to view the stock information? All right, Southern Nova. Not software. This is a trading platform. Okay, so if you used to trade at TD Ameritrade or E-Trade or Charles Schwab or Fidelity, they all have a trading platform where you can find information. The high, the low, the close, the option chain, EX days, all that kind of information that pertains to a stock. Well, this is the same thing. This is Thinkorswim. Now, you can, from what I understand, download it for free and use it for, I think, 30 to 60 days. But Charles Schwab would eventually like you to put money into their account. And no, I don't get compensated on any of that. But I have been using this for over 20 years. I've looked at a bunch of different trading platforms. Some I like, some I didn't like. But this one had everything that I wanted and more. All right. Okay, what calendar app is that? This exact same thing I just said. Okay, it's not an app. It is a trading platform. Okay, and this is a Thinkorswim, and it's owned by Charles Schwab. All right. Do you think the Greeks are just as reliable as charts? Nope. Jim, I use my Vanguard brokerage account, free trades. Cool beans. No such thing as a free trade because you still have to pay, not the broker. The broker is free. You have to pay the exchange. You have exchange fees you have to pay. Okay, because I have Robinhood and those are free trades, but the exchange fees are not free. Okay, you can't trade an option for free. You have to have an option fee. It's in there somewhere. All right. So when you buy a stock 2 weeks before the dividend, you set a covered call strike not above the cost, at the cost. If I'm buying it for 100, I want to sell it at 100 because the premium is usually higher at the money. So what are we looking at? AT&T, 1930. The closest one's going to be the 19. That's 41 cents. All right. But you're losing 32 cents off the top, so you're only walking away with 3. That ain't even worth it. Okay? That one's not even worth it. Those numbers don't work. So let's look at Macy's. The numbers work on Macy's. Okay, so at the moment, Macy's at 1770. Okay, if I buy it at 1770, so 1750s at the money, I'm walking away with 2%. I like at the money or in the money because I don't want to have to rely on the stock to have to move up. Robinhood, Vanguard, all of those are different entities where you can trade with. I want to be able to algorithmically develop a list of symbols to pick from. How would you do that? Well, this part of you wouldn't do that. Vanguard doesn't charge exchange fees. I know Vanguard doesn't charge exchange fees. The exchange charges the exchange fees. Anyway. What's the 200-day look like? What's the 200-day look like? You want to look like the 200-day moving average. Well, you're missing a whole bunch of information or requested information in your request. Because what moving averages do you want me to look at? And what are the numbers to go along with it? And do I do that? No, I don't even do that. Okay, I take a look at the basics. Okay, I like basics. I like facts. Okay, when I'm looking at this chart right here, it goes from the beginning of July to the present day. Well, what am I looking at? Well, there's the high. That's a fact. Where's the low? That's a fact. Where's the gap down? Well, it's the gap down here, there's a gap up here, there's another gap down here, there's another gap down here, and there's a gap up here. This is what I'm seeing as I look at this chart. What direction is it currently going? Well, there's the high, here's the low. Look, it's going to the upside. Okay, certain things I can see. 20-day moving average, I don't even look at it. Because what I'm looking at, 30-day top, 30-day bottom, one gap to the downside, another gap to the downside, one gap up. It's moving up here very nicely. There's the bottom, there's the top, somewhere in the middle is right about here, so it's still on the lower side going up. Think of it as a football field, okay? The football field, the end zone, it starts right at the high, and this end zone is right here at the low. The 50-yard line, smack dab in the middle, right there. Okay, 50-yard line. Well, where are we right now? Well, right now it looks like we're at the 35. 35-yard line. How much further do we have to go to the 50-yard line? Well, you got 89 cents, something like that. Depends on what kind of analogies you want to use and what you want to do, what you want to use to see what it is you want to see. I know I'm sounding like Kamala Harris, you know. What you want to use to see what you want to see when you want to see what you want to look at. What the fuck does that mean? It's right here. It's an upward trend. There's the high. Here's the low. Halfway is right there. It's moving to the upside. Great. Either you like the trade or you don't. When I say it's going to be simple, safe, predictable, and consistent, I can get you a third grader saying, hey, that's the high over there. No, here's the low over there. Oh, what direction is it going now? It's going up. I can get you a third grader to show you that. Adults have a tendency to make things more complicated than they need to be. It was created for a 9-year-old. Okay, everybody here in the audience is over 18. If you can't figure out what a 9-year-old, and she wasn't a Mensa student, she wasn't an honor roll student, she was just your average, everyday little girl, 9 years old, and she wanted to trade because her daddy was trading. So I taught her simple, safe, predictable, consistent. It just so happens to make about 50% per year. So fine. That's all I am teaching here. A simple trading strategy. You want to make it more complicated? Have at it. So, you never told us what calendar app that is. Yeah, I did. This is Thinkorswim. Okay, it is owned by Charles Schwab. Charles Schwab bought it from TD Ameritrade. TD Ameritrade bought it from Tom Sosnoff. He was the trader who created it. Okay, I've been using the same one for over 20 years. Okay, after it went from Thinkorswim, it used to be the trading platform, then it got bought out by TD Ameritrade. So now I had moved my account to TD Ameritrade. Now TD Ameritrade got bought out by Charles Schwab, so I had moved my account to Charles Schwab. Commissions, fees, 5 cents on one $5,000 trade. Okay, yeah, but you still have a commission fee. You still have a fee associated with any trade. Okay, now the brokers used to charge fees. When I first started trading in the 80s, it was a $125 fee just to make a trade. So when I bought something, I bought it plus a $125 broker fee. And then when I got my profit and sold it, well, there was another $125 broker fee to get out. So it was $125 in, $125 out. Okay? Now it's a little different. Hey, buddy, what about CMG? Oh, somebody likes Chipotle. CMG. Now, I don't normally trade Chipotle because they don't have dividends. Only on the sell, no fee in stock when you buy. Yeah, Jim, I get that. Okay? Jim, if we can concentrate, seriously, if we can concentrate on what we're doing rather than squabbling about minor details, okay, you got to remember, all the people here are on a different level. Everyone. Okay, there's a lot of beginners here. There are a lot of people that aren't beginners. I like to keep it simple and easy. Simple, safe, predictable, and consistent. Now, I understand a lot more than most people do. Okay, I have a level 5. I could do really crazy shit, and I have in the past. But this trading strategy, I want to keep it simple for everyone. Because I consider this as a stepping stone. It's the simplest, easiest, safest trading strategy there is. Other than buying a stock and selling a stock. Well, you're buying it and you're doing a covered call, which is very safe. Okay, never buy something you don't understand. Okay, never sell at a loss. These are simple things that anyone can understand. Make sure the company is profitable. How do you figure that? Well, do they increase their dividends every year? Well, why are we talking about dividends? Because a dividend is the portion of the profit that the company gives to the investors. And that's you and me. We are the investors. We buy, we sell, we try to make money buying and selling. We're the investors. Okay, if the profits continuously increase for the investors, well, the company is continuously profitable. I like 20 years of consistent profits. And me liking 20 years of consistent profits, well, there's 300 companies, about 300 companies that have what I'm looking for. And weekly options. That's all I want to look at. The only trading strategy I want to look at is the covered call, because it's simple, it's easy, and it's safe. And it just so happens to make 50% per year. Great. It's a wonderful starting point. If you jump in the stock market and you make 50% a year on a safe strategy, yes, you have to put some time and effort in it. No, it's not free. Okay, Jim, I didn't get to the point where CMG has no dividends, and no, it's not on my list. I haven't gotten to that yet. Okay? But let me finish saying, I like simple, safe, predictable, consistent. If it ain't broke, don't fix it. Okay? Now, if I wanted to get more than 50% per year, well, I'm going to have to look at different strategies. Well, you look at different strategies, well, they come with more risk. Okay? There's a balance between risk and reward. If I want to sit in front of my computer, I can make a shit ton of money. But I don't want to. I like my life the way it is. It's simple, it's safe, it's predictable. It takes me less than 10 or 15 minutes a day to make what I like to make. And then I'm happy. Okay, I for the most part, I like to think that I have the little green greed monster on my shoulder under control. Every once in a while, I let him dip his paw in the water. Whatever, however you want to put it. But anyway, CMG, Chipotle, doesn't pay dividends. Okay? So Chipotle is not on my list. Okay? Now, a lot of people like Chipotle. Great. Wonderful. They don't pay dividends. It's not on my list. And holy cow, I got 94 questions. And we're at 11:15. Holy. So let's see if we can breeze through this. Home Depot is a great... You are absolutely 100% correct. Home Depot is a great dividend stock. However, okay, 362. The 362s are going for 410. Nice. A little out of my price range. I'd like to stay 250 below. Okay, great. I never ate their food. Well, Home Depot doesn't make very good food. There's the high, here's the low. Where was it? Where is it? Here where we are currently right now on an upward trend, 362. The 362 50s are going for 410. That's over 1%. If you like Home Depot. Okay? Look at the last 30 days. Why are we looking at the last 30 days? Well, gives us an idea of where it's going next. Okay, 30 days ago was a 30-day high. She came down, rebound. Where is she now? Okay, there's where she is now. A little too high for me, but if you like it, because here's the bottom, there's the top. It's a little too close to the top for me, and Friday was not as high as Thursday. Okay, so I like Home Depot, I do. They've been in business for over 100 years, and they are a dividend stock. Is it better to set up the Think and Swim on a computer as opposed to a cell phone? Oh, yeah, you don't want to use a cell phone. Because, in my humble opinion, you don't want to use your cell phone because there's so many numbers. How are you going to be able to see this on your cell phone? All right, 99 questions. Holy cow. You can't see the screen. Okay. Who's saying I can't see the screen? Future Chris. Okay, I see the screen fine. All right, let me think. I think Macy's earnings Wednesday. Okay. What's your average annual return with your method, inclusive of dividends and capital gains? 35. It's about 50% per year. All right. What's the 200 again? Sorry. No total set, blah blah blah. Hey buddy, what's CMG? Blah blah blah. Home Depot's great. Yep. I need help with learning the different order types. Okay. A single call, you get one price. Buy the stock and sell the call at the same time, you get more money. You're absolutely right, Tino. Boss, I haven't seen anyone with patience like yours. Hey, I had 3 kids. All right. Can't you still make a day trade on a monthly option? You can lose it whenever you want, right? Okay, I'm going to agree with you. You can. Now, let's say, hypothetically speaking, I wanted to add some of the monthly optionable companies in there. Now, instead of having 300 companies to choose from, now I have what, 900 to look at? Okay, you got to draw the line somewhere. You can't look at everything all the time. All right, and I'm going to go back to the saying, if it ain't broke, don't fix it. Okay, I haven't come across a decent company. Well, actually have that. There's a lot of nice companies. GPC, 70 years. That's 7 decades of increased dividends. 7 decades. But they're monthly. They just don't pay the same as the weeklies do. And then it's a little bit more time and effort in order for me to figure out, well, why am I looking at it now? Well, here's the dividend. It's a monthly. And if I'm wrong, I got to hold it longer. The numbers just aren't the same. So you have to come up with what works for you. You like monthly dividend, a monthly monthly optionable stocks? Fine, you do it. I don't want to do it because it just doesn't work for me. Oops. Okay, cancel. Yep. You can't even find stocks that are low enough to buy 100 shares with low starting fund. Well, I'm going to disagree with you there for a second. Now, my grandson, he's 4 years old, his account he started out with $50. Okay, the grandparents pitched in. Now we take our change and we throw our change into the account. So what is that? Maybe $2 or $3 a week. What the heck is it going to do with $2 or $3 a week? Well, here's the thing. There are trading platforms that allow you to trade and use fractional shares. So you can actually buy 50 cents worth of Apple. You can buy $1.32 worth of IBM. That's fractional shares. Now, if you buy a fractional share and the stock moves up, because stocks have a tendency to move up before the dividend date, you can take that tiny profit and capitalize on it. But it always comes down to the same strategy. Don't buy a stock you don't understand or you don't want to own. Okay, look at the calendar. If the calendar tells you 3M is here, and 3M has a tendency to go up before the dividend, I like 2 weeks on a Monday. Okay, so I would buy it on the 12th, and as soon as I buy it, I would set my sell order or an alert to let me know when the stock gets to a certain price. So if I'm looking for a 1 or 2% increase in the stock price, well, I put that in as a notification. And then you can have all your notifications on the exact same 1% or 2% or 3% increase. And then when it goes up, it'll notify you. You take a look at your phone and boom, you sell it and then you get your profit. Stocks have a tendency to move up consistently before the dividend date. And the dividend dates are these little green things. That's the last day the stock trades before the dividend is paid out. And the dividend is a portion of the profits. And if the profits are continuously increasing every year, well, those are the companies that I like. These green little dots are the companies that I like. Thanks for explaining the week versus monthly. Yep. I guess monthlies aren't as strong. Not necessarily so. They're harder to predict because you have Jim, what is your favorite dividend stock to buy now in long term? Okay, so Jim, when you're talking long term, okay, I've been investing for over 20 years. The longest I've ever held anything is 9 months. Okay, my idea of long term is a quarter. That's 90 days. Okay, now I had AEO for 4 months, and I was like, and Win. I have Win going on 3 months now. I prefer 5 days, but every once in a while, if the stock drops, I'll hold on to it and I'll continue to collect options on it. premiums. All right. Keep on going. Can't you still make a day trade monthly? Yeah, you can, but I don't want to bother. He doesn't buy options. He only sells covered calls. Thank you, 86. What does that mean exactly? Uh-oh. Okay, so on your right side are call options. On your left side are put options. Okay? Now, you can buy, you can sell. Now, buying and selling both have a different, totally opposite mindsets. Okay? So, as an option seller, now, I used to be an option buyer. As an option seller, I want the value of the option to go to zero. Because what I'm doing is I'm doing it backwards. Okay, most people think you have to buy and then you sell. Okay, well, what if you sell first and then you buy later? Okay, to open a contract, okay, any kind of a trade, there's a buy, there's a sell, and there's a profit or a loss. Now, there's no rule saying that you have to buy first and sell later. Okay, so what am I doing? I'm buying a stock and then eventually I'm going to sell the stock. Okay, great. What am I doing with the option? Well, I'm selling the option. Eventually, I've got to buy the option. Okay? So to open a trade, you can either buy it, you can buy to open, or you can sell to open. But you eventually have to close the trade. So when you close the trade, you're either selling to close or you're buying to close. So people are trying to make this more complicated than it needs to be. Buy a stock, you sell the option. Great. If it hits your target price, you're back into cash. It's actually that simple. You want to go into semantics and get into detail, well, that tendency to make things complicated and lose people. Okay. Now, back to the mentality of the buying and the selling. If I'm selling the option, I want it to go to zero. If I'm buying an option, well, I want it to go up in value. Two totally different mindsets. Okay. Now, I used to be buyer and wait for it to go up. Yeah, I made a lot of money then. I also lost a lot of money then. Okay, so I got to a certain point where this is the only thing I do because it's simple, it's safe, and it's predictable. And if it ain't broke, don't fix it. What stock is that? Well, we're looking at Home Depot behind me at the moment. STX. STX? Haven't seen that in a while. STX. Seagate Technology. Okay, very first thing. High, low, what was it? Where is it? Okay, and what direction is it going? That's the first thing I want to take a look at. And then once I get that figured out, well, what's next? Next, I want to see the numbers. What am I buying it for? 101.73. Okay. What strike am I going to choose? Well, the closest one is the 102. What's my profit? 150. Well, that's more than 1%. That was pretty quick. Great, so we know the numbers work. We know we like the high, the low, the where was it, where is it, and where it's going. We like that. Now let's take a deeper look. What do I mean by deeper look? Well, I want to see the numbers. I want to fill in some of the blanks. A year ago, Seagate was at 64.62. Well, what's the bottom of the year? Well, 62.32 was the bottom of the year, and that was back in September, the beginning of September. Okay, where's the top of the year? Well, here's the top of the year right here, 113.72. And that happened towards the end of July, just a couple of weeks ago. All right, great. Where is it now? Well, right now, it's at 101.73. Well, great. Where is it going to be next Friday? Because if I'm buying it on a Monday, I want an idea of where it's going to be on Friday so I can decide whether or not I want to jump in on this. All right, well, the last 30 days, we'll look at the 17th of last month. There it is. Here's the last 30 days. A little dip, jumped up to the high of the 30 days, 114. She drops down here, one gap down, two gap downs. This gap filled, that gap filled. Remember I tell you gaps have a tendency to fill? All right. So here's your 30-day bottom here on the 5th, and this is definitely going to the upside. Okay. Now, if we were on a football field, I would say that's at the 25 or the 30-yard line. And in the end zone, way up there at 114. It's got quite a ways to go. So that looks like a good trade for Monday. All right, what am I making? Well, at this current moment in time, the 102s are going for 150. The 101s are going for $2, but I'm losing 73 cents right off the top. You take 73 cents off there, and that gives me what? 20, a buck 27. So a buck 27 off 101, that's over 1%. And what does the stock have to do? It's just going to stay where it is. It could even come down. Look at that, 101.73. It can come all the way down to 101. It can come down 73 cents, and it's still going to make my trade. Okay, if it goes up, great. If it stays the same, great. If it comes down a little bit, great. I'm still good to go. That's ideal for me. Stocks get 3 ways to move: up, down, and nowhere. Some people say sideways. I hate sideways because they go up, they go down. I can't see a single place where it went sideways. Okay, it goes up, it goes down. Go up, it goes down. All right. All right. So I actually like Seagate for Monday. Let's write that one down. Wait a second. Hold on. Hold on a minute. Before I do that, let's check on Yahoo Finance, STX, and see how well how consistent they are with their dividends. Okay, whoa, hold on a second. 2004. Okay, so they have been paying for 20 years. Started out at 6, went to 8, to 10, to 12, 18, 24, 38, 43, 54, 63, 67, 70. Okay, great. Consistently, not consistently increasing, but increasing. Okay, so what do I mean by that? All right, well, let's look at how long did it stay at 54. Okay, 2014. Okay, never mind. 63. 2015, all the way up to 2019. So for 4 years, they stayed at the same dividend. They increased it. They didn't go back at all. They never cut their dividends, which I think is awesome. Okay, and they increase them. Not consistently, but they do increase them. All right. Okay, so let's think about adding it. And I think I will add it. STX, right? So I want to go here. I want to go here. I want to go edit. I want to add a symbol. STX. Add symbol. Save. Okay, so Seagate has officially been added to my list. Okay, now they don't have 20 years of consistent increases. They do have 20 years of dividends, and they don't go backwards. Okay, so now I have 301 companies. Anyway, find that one humorous. All right, so let's keep progressing. Keep progressing. Oh, wait a minute. I want to write STX down for next week. STX. All right, so we'll take a gander at STX next week and see what the numbers look like. All righty. Trading View. I have no idea what that means. Sorry, I'm new here. But when you say you make 50% for 20 years, what do you mean? Oh, well, 50% a year. I didn't say for 20 years, I said for 15 years. Because my daughter first wanted to learn how to trade in 2018. So 2018 was about 15 years ago. Okay? Simple strategy, simple, safe, predictable, consistent, all that kind of nice, neat, fun stuff. So I've been averaging 1% per week for the past 15 years. That's about 50% per year for 15 years. The first 5 years, I remember the very first year, I think I made 125% very first year. Very next year, I didn't do so well. How are these calls taxed? Do you want to have an LLC to trade like this? Ooh, that's one of the best questions I've gotten all week. Holy cow, this person actually serious. So when you're trading, okay, and if you are going to be serious about your trading, you're definitely going to have to want to talk to a tax strategist, because if you believe in paying taxes with the current system we have, fine, I'm not going to get into that, but you need a tax strategist to help you set up your trading account in a manner in which you can legally pay the least amount of taxes without getting in trouble. Okay? You like words, like the word gander. Gander? I don't know. Use gander in a sentence. Waste your opinion on ETHU. ETHU? What the hell is ETHU? ETHU. Yeah, no. Sorry, it's a monthly. I don't like monthlies. Monthlies just don't pay. I really don't care what the chart looks like. Look at all the gaps. I don't like all those gaps. A lot of inconsistencies there, in my humble opinion. Tech trades. I like the way you put that. All right. I gander you don't use a thesaurus often. Hell no, I didn't go to college. What do I need to? You know what? I'm a simple person. Good means good. Great means great. You know? Take a gander at this. Take a look at this. Same thing. I think Macy's has earnings on Wednesday. Would it affect the share price drops past break even? EX dates have a tendency, stock have a tendency to go down after the dividend is paid. Okay? Earnings sometimes has an effect on the stocks. It depends on what the market maker is thinking at the time. Usually, market makers overestimate and move the, let's say, the starting line, because the only number that is controlled is the opening price of the day. What do I mean by control? Well, one person only decides what is the starting point every single day. Now, you and I, we are the buyers and we are the sellers. If we like something, we will continue to buy it. And as it increases in value, if we like it, we will continue to buy it. We are who create this crap. We say what's too high and we say what's too low. Okay, now sometimes our opinions or our thoughts are swayed by the talking heads on TV. Great. You know, so it depends on how you want to look at things. Well, I like facts. I like the fact that companies are consistent. Great. I like the fact that here's the numbers. Okay, here's the high, here's the low, here's the direction it's going. These cannot be exaggerated. It is what it is. You know? All right, let's keep going. SLB. SLB. Isn't that Schlumberger? SLB. Yeah, Schlumberger. Schlumberger, those are, they're a dividend king, aren't they? Okay, over 50 years of increase. Very first thing I want to see. High, low, where was it? Where is it? What direction is it going? Look, here's the direction it's going, down to the downside. Down here, turn around, it's going back up. Look, we got 1, 2, 3. 3 bottoms there. That's what you call some support. All right, if it was in the other direction, it would be resistance. But it doesn't seem that this company is worth less than $42 because it's never went below so far this year. This is what we're seeing. If I want to look further in the past, I could if I wanted to, but I'm not a long-term trader. I'm 5 days. I'm in on a Monday. I like to be out on a Friday. It doesn't always work, but I like to be out on a Friday. That's my goal. Now, I'll go into a company as if I was going to hold on to it forever, and I will hold on to it forever until it hits my exit target. Because it's not an investment until you have an idea of where you're getting out. Buying is, you make your money when you buy, not when you sell. Because if you buy down here, and the price keeps on dropping and dropping and dropping, and then you sell, well, you just made a loss. But if you buy at the low and sell at the high, well, then you make a profit. It's easier to make a profit when you're buying low and selling high, not when you're buying high and waiting for it to go higher. Yeah, no. All right, so Schlumberger, let's take a quick look. 45.26. So the 45s are going for 55 cents. Well, at 45, I'm losing 26 cents off the top. So I'm walking away with, what's 26? Look at that, 26. 29. So I'm only making 29 cents off of a $45 stock. Yeah, no thank you. But look at the 45.50s. The 45.50s are going for 36 cents. Well, that's less than 1% also. So why am I looking at a company that's not paying me 1%? Okay, so I don't even have to look at the rest of the charting. I don't have to look at the last 20 days, last 30 days, the last, I don't have to look at that because it's not giving me 1%. First thing I want to see, high, low, where was it, where is it, what direction it's going? Great, fine, it takes 2 or 3 seconds. Okay, high, low, blah, blah, blah. Okay, what am I buying it for? What's the closest strike price? What am I selling it for? What rate of return is that? That's a no. Sorry, it just doesn't, it doesn't, it's a good company, don't get me wrong, but not this week. The numbers don't work this week. It might work next week or the week after, or when it comes from the dividend. I don't know. What is your average annual return? Yeah, I already did that one. On covered call once dividend is received, if stock price drops, do close at break even before expiration? No. Why would I close? Why would I do it at break even? That's trading for nothing. Okay. Now, if I buy the stock, okay. So remember, let's go to the calendar. Okay. Now we're looking at Johnson & Johnson. Okay. Johnson & Johnson. See it? If I'm going to buy Johnson & Johnson, here's the EX date here. I want to buy it 2 weeks before the EX date, 1, 2, on a Monday. Monday, the 12th. Alright? I want to buy it at the market, at the open, if the numbers work and the charts are telling me it's a good time. Now, I like to get 1%. Now, let's say hypothetically I buy it at $100. Come Friday, if it's above $100, I'll be back into cash the following Monday. If it's below $100, let's say it's at $99.98, well, I will continue to own the stock come Monday. Now the stock is below my purchase price. Well, I'm going to sell another $100 call against it and grab another 1%. Great. It's going to hit my target or it's not going to hit my target. If it hits my target, great, I'm back into cash. If it doesn't hit my target, I have no choice in the matter than to do it a third time going into the dividend week. Do I plan to do that? No. Do I prefer to do that? No. I would prefer to be in 1 week and then out. That's my ideal. Does it happen all the time? Well, it happens often. Okay? But I get my 1% here, a 1% here, a 1% here, and the dividends, and I will keep doing it until it hits my target. Because I have no problem whatsoever holding on to Johnson & Johnson for, now they've been in business for 100 years. Why would I want to sell them? Especially if they're giving me 1%. The screen, I have no idea what he's talking about, the screen. The covered call, let's get it. What stock is that? That was Johnson & Johnson we're looking at. I have SCHC. Good for you. What stock is that? Where you did that? SLB, where you looked at that. What kind of account size do you have? I have 6 different accounts. Do I have to pay taxes on the gains and losses on Thinkorswim, or can I open up a different account to avoid? Okay, Red's Power Washing. Okay, that you're really going to have to talk to a tax strategist or tax planner, however you want to deal with the making of money and the buying and investing. Okay? Can you check EL, Estee Lauder, for next week? Sure, let's check Estee Lauder. I actually have some Estee Lauder. Okay? I bought Estee Lauder a long time ago, collected the dividends, now I'm waiting to get out of Estee Lauder. Oh, double righty then. Alright, Estee Lauder. First thing, as always, let's do a video. Here we go. Let's take a quick look at Estee Lauder, EL. First thing I always want to take a look at, the high, the low, where was it, where is it, and what direction is it going? Great. Once I figured that out, now I want to check the numbers. What am I buying it for? 96.25. Well, great. What's the 96 going for? The 96 is going for 450. Well, that's a nice chunk of change. The 97s are going for 4. Okay, looks like the 96s has a higher rate of return than 4.25. Okay, I can deal with that. Alrighty, so now what I want to take a look at. A year ago, Estee Lauder is at 162.23. Okay, it bottomed out just recently, last Friday. Was that right? No, wait a minute. Last Monday was the 30-day bottom. Okay, was the low of the year also. So here's your low of the year. Where are you going to make money in the stock market? You're going to make money buying low and selling high. Now, how do you know where the low is? Well, that's pretty self-evident. However, look, if I go back a couple of days. If I go back a couple of days, okay, how do we know that's the bottom? Well, we don't. Hold on, let's save that. Go to draft, go there, and let's go there. Okay. Long-term capital gains tax is a tax applied to the assets held for more than a year. Okay. Hope you guys got that. Long-term capital gains are taxes that are applied to anything you hold for more than a year. Short-term capital gains are anything you hold less than a year. Okay, great. Still, talk to a tax professional. Not a professional, a tax strategist, or a tax planner. Walk in there and say, hey, I want to open a trading account. I want to trade hundreds of thousands of dollars, and I don't want to pay taxes on them. Tell me how to do it legally. And they'll tell you how to do it legally. All right. All right, so Estee Lauder. How do you know where the bottom is? For me, you guys got to figure out what it is for you. But for me, it's 2 days to the upside. One should have a CPA to do their taxes. No, they should not. They should have a tax strategist to do their taxes. All right, anyway, how can you tell where the bottom is? Well, that looks like a bottom, but the very next day could be lower. Could be higher, could be low. It's a 50-50 shot, right? For me, whoops. Oh, come on, damn it. For me, I like the 30-day bottom, but then I like 2 days to the upside. 1, 2. Okay? That's the bottom for me. 2 days to the upside, that tells me that's the bottom. That's when I want to jump in. I'm going to write Estee Lauder in the book because it looks interesting for next week, especially considering the premiums that they're giving me. Look at this, 96.25. The 96s are going for 450. All right, that is over 4%. Now, if this is the bottom of a 30-day period and she's moving to the upside, well, Friday was a little bit down, but they had a gap up here. Maybe that could be filling up. Maybe she's going to turn around again. I'd wait for Monday to see where she goes because I like the numbers and I like the chart. Because you're going to make your money when you buy low and sell high. And if it's at a 30-day bottom now, but it's not really a 30-day bottom, is it? It's the bottom of the year. Okay? So it's the bottom of the year. You can only have one bottom of the year. My CPA is a tax strategist and accredited investor. Jim, if you have the number for your account, I can give you about a dozen people that are looking for a tax strategist if he's willing to take on new clients. Okay, so you guys in the audience, we've been talking about finding a good tax strategist. Mr. Jim over here, he has a tax strategist who's also an accredited investor. Maybe We can talk him into giving us the phone number, and we can ask him a bunch of questions. All right. What about STX? We took a look at STX already. What app is that trade? That is the Thinkorswim. He has 450 clients and not taking any more clients. There you go. Do you buy and hold or buy and sell? I don't buy and hold anything. How did you learn all this? Trial and error. Okay, I've made more money in one day than most people make in a month. I have lost more money in 1 week than most people make in a year. I've paid my dues. I've been playing this game for about 20 years. All right, I've seen a lot come, I've seen a lot go. If your strike price is lower than the current price you paid, wouldn't it always be executed? Not always. Most of the time, yes, but not always. Manny, hold up. Can you repeat what you just said? You buy a stock, then you make a covered call. Yeah. Hey, Drazik. Drazik just showed up. Well, Drazik, how are you today? Okay, you're a little early. Usually you show up at 11:25 or 11:30. Today it's 11:15. Anyway, so I buy a stock, sell a covered call. Okay, GLW. Thinking to do some calls Monday. What do you think? GLW. Let's take a look at GLW. GLW. Drazik, I always appreciate people who have a good sense of humor. Makes things so much easier to be able to have a conversation with them. All right, so GLW, Corning. First thing, high, low, where was it? Where is it? What direction is it going? Cool. We're going to gap here, going to gap there. Interesting. We're at $40, $40.19. The 40 is going for 60 cents. You take the 19 cents off, you're walking away at 41. Great, that works. The $40.50, nah, that doesn't work. So the $40 strike price would work. It would give you 1%. Wonderful. Okay, I got to check these questions over here on YouTube. I just saw them. All right, Feline, 1.5%. Yeah, how's the chart looking? GLW, we'll take a look at that one. But what is that? There's no way to avoid paying taxes if you sell stocks at a profit. Sorry, Jim, I'm going to disagree with you, because there are ways of selling stocks at a profit and not paying taxes on it. Okay? All right, so let's continue. Corning, okay. So at the $40 strike price, I would make 1%. If I bought it at $40.19, sold the 40s, subtract that 19 cents that I'm losing, I'm still walking away with 41, which is over 1%. That's what I'm looking for. A good quality company. I know who Corning is. I know what they do. I grew up in the 60s and 70s where Corning ware, that's what we used to call it, Corning ware, unless you reinvested in 60 days, the stock profit. All right, Jim, I really don't want to get into arguments about it, okay? There are ways of selling a stock, getting a profit, and not paying taxes on it, okay? If your tax strategist doesn't know how to do that, you might want to think about finding a new tax strategist. All righty? Is the chart looking good, though, timing-wise? Well, we're about to look at it. Hold on a second. All right, so a year ago, Corning, 32.21, bottomed out of the year, the end of October, at 25.12. Cool. You can put profits into an IRA. Okay, Jim, what I'm saying is there are ways, I'm not even going to do it anymore. There are ways of trading and not paying taxes. There are. You just have to be, what am I looking for? Diligent enough to ask enough people the right questions until you get the answer you're looking for. There is ways of doing it. You just got to figure it out. I can't tell you because I'm not a professional in that manner, and I don't want to get in trouble for telling you something that may be true. Okay, you got to do your own due diligence. All right, GLW. 40, 19, 41, yep, okay, bottom right there. Topped out at 46.30, and that was in the middle of July. Okay, so the middle of July, I want to take a look at the last 30 days so I get some kind of indication of what direction I think it might be going. Okay, here's the last 30 days. What does that look like to you? Okay, 30-day high, 46. 30-day bottom, 37. That's a $9 increase or a $9 drop on a $40 stock. Okay, that's 20%. Okay, that's almost 20% drop. 1, 2, 3, 4, 5, 6, 7, 8, 9. 9 days going to the upside. Look at that. It's very slow, but it is moving to the upside. Now, let's take a look at seasonality to get an idea of what does it normally do this time of year. Now, for that, we take a look at seasonality. For those of you who don't know what seasonality is, well, all the way to the left is January 1st. All the way to the right is December 31st. The blue line represents the movement for this year. This little blue dot here, well, that was Friday. This is the area I want to look at right here, from August to September. Okay? So I want to take my little cursor, put it on the blue dot, click left, drag it right. As soon as that little space lights up, that's about 2 weeks. Okay? The 16th to the 9th, sorry, to September 3rd. So that's about 3 weeks. But look what the stock does. It basically just goes sideways or flat. Okay? Basically just flat. That's it. No big ups, no big downs. Just nice, smooth sailing. I like that because it shows some kind of stability. All right. Can I at least be with my actual girlfriend, Jaden? Jason, sure you can. You have to ask her why you're not with her. How can I see what your trades are going to be Monday morning? You want that? That is, I have a morning trading group. Okay, there's a bunch of us that get together. Okay, it's $100 a month to be part of the trading group, and we go over stocks every Monday, Tuesday. That's when we buy them, Monday and Tuesday, live. So it's actual, what do you call it? A Zoom call where you see my screen and you actually see all the trades that I make as I'm making them, as I'm explaining to them. Okay, and that's what the people are paying for, to see over my shoulder what to do, and they can ask me questions. At 9 o'clock we sign in. Now sometimes I'll stay on for 2 or 3 hours answering questions because that's what you're paying for there. Okay, we go there, you watch all my trades. Now I do all my trades live, so you get to see each and every one of them. And then you can ask me questions. I can't tell you what to do, but I can show you the numbers, kind of like what I'm showing here. Well, this is the price now, this is that, this is this is that. And then we do it. And then on Friday, now we do most of the buying on Monday and Tuesday. Friday at 3 o'clock we sign in because, yeah, most of our trades are Monday. But Friday, the options expire. So we need to know, well, are we buying? Are we selling? Are we holding it through the weekend? What looks like what on Monday? So Monday, Tuesday, Wednesday, Thursday, 9 a.m. until whenever you guys are done asking questions. Friday, 3 p.m. until the market closes. And then we keep going after that until you guys are done asking questions. So if you want your hand held through the process, well, that's the best way to do it right there. Okay, I show you how to trade. Now, I like using Thinkorswim because that way everybody's on the same page. Everybody's looking at the exact same thing. Whether you use it or not is up to you. James, how many folks are in your morning trading group? Well, I'm going to cut it off at a certain amount, and then it'll be a waiting list. Right now, I could probably take a few more, but I do want to cut it off at a certain point because I don't want too many people on at one time. And we also have the what do you call it, the Discord, where everybody chats back and forth. They don't even need me in the Discord. I go there once in a while to help answer questions or whatnot, but they like talk amongst themselves. But it's cool. I mean, that's what we're here for. We're here to make a safe, predictable, consistent 1% per week. And we do trade, and we do have other strategies, and then we do try to implement other strategies every once in a while. But that's not something I encourage. I like to have everybody on the same page. So everybody's on the same page coming in. Okay, but there's a few of us there in the trading group that we have other trades that we make. All right, I thought it was Tony Hawk. Well, I'm Tony Hawk's brother. What is the top reason why you would want to sell on Friday? so that I can take that money and do it again on Monday. Okay? Remember, stocks go up before the EX date, before they pay their dividend. After they pay their dividend, they have a tendency to go down. Okay? Tendency to go up before the dividend, tendency to go down after the dividend. All right? So we want to jump in, buy the stock, and have it going to the upside, get our profits. Okay? Be in on Monday, be out on Friday. Because at Friday, we get closer and closer to that dividend. You get closer and closer to the dividend, you get closer and closer to where it goes down in value. And that's not what I want to do. Okay, I want to sell when I get my 1%. So I like to do it on Monday, be out on Friday. I like to be out on Friday. So we take a look at the numbers, because the numbers paint a whole different picture. What am I buying at? What am I selling at? Great. Now here's Friday at 3 o'clock. Well, we have an hour to figure out, okay, we're in the money, we're at the money, we're out of the money. Well, if I do this, this is going to happen. If I do that, that's going to happen. Those are questions we ask on Friday afternoon. So we can't tell you what's going to happen on Friday until Friday gets here. All right. Okay. Leggett and Platt. So Penny Stacks wants to take a look at Leggett and Platt. L-E-G. Whoops. L-E-G. Isn't Leggett and Platt a monthly? Yeah. The only reason I knew it was Leggett and Platt is because it's a Dividend King. Okay? And no, I don't trade that one. Oh, I'm caught up with all the questions. Uh-oh. Okay, T-Money. There are a lot of fake people sharing strategies. Oh my goodness. Earnings call will generate a black swan with bad news like it happened with Intel. You're absolutely right. Black swans are not the greatest of news. They're not every stock you can sell covered call options. Well, T-Money, every one that I do can. Okay, remember, I've been doing this for a while, so every stock I trade on my list is a viable entity for my consideration. And I look at each and every stock on my list when it is time for me to look at them. That's why he only does weekly options with dividend. Bimmerad Redneck, you're right on the ball, dude. I got to make you a moderator. That way you can help me smooth this out. That's a very good return. Where you stuck with any stocks? Did you sell all sectors? I don't do sectors. He is not one of them. Blah 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 blah. Not every stock you're right. Not every stock you can do covered calls with. But the ones that I do, where to start trading? Where to start? Now, Mo, you're new here. Okay, I have no Mo Senior. Sorry, you missed that part. Because I'm James Senior. I have a son, and I really wanted a James Jr., but my son decided to name him Maverick rather than James. What was he thinking? Oh, I know what he's thinking. Here's what my son was thinking. If it was a girl, he got to name her. If it was a boy, she got to name him. That's why it was Maverick James. Dell. Dennis wants to take a look at Dell. Well, Dell, I like Dell. Do I have Dell? Hold on a second. Yes, I actually have. Wait a minute. No, I sold my Dell. Cool beans. Did I sell my Dell? It went. Okay, I'll have to take a look at that later. All right, Dell. D-E-L-L. D-E-L-L. Try it again. And there you have it. Alrighty then, let's take a look at Dell. First thing, as always, the high, the low. Where was it? Where is it? What direction is it going? Wonderful. Now let's get started and take a closer look. Does your group doing what you do affect the outcome? Not even close. Okay, take this into consideration. Okay, when I buy stocks, I buy maybe 100 or 1,000 at a time. Okay, between 100 and 1,000. Right. When we're talking about most other companies, they trade millions upon millions per day. Yeah, my couple of hundred ain't gonna do squat. And if you take everybody in my group, and if we all bought 1,000, yeah, that ain't gonna do squat. Ain't gonna change anything, because the numbers are so freaking huge, and we are just a small little fish in this pond. All right, let's take a look at Dell. A year ago, Dell was at 54 bucks. That was the bottom of the year. Take a look at the high, 180. 180 from 54 to 180. That's more than 3 times the money. Okay? Last 30 days. Oh, wait a second. The high, we already did the 180. Okay, so the last 30 days, this is what we're looking at. 30 days ago was the 30-day high at 129.77. Here's the bottom 2 weeks ago. Okay? Look at all this upward momentum. Now, at a certain point, you're going to say, wait a second, I'm getting off this pony. Because I like 2 days the upside, big jump in. Okay, now I've been watching Dell for the past couple of weeks. Moving up nicely. I probably would think about jumping in again on Monday if all the numbers worked. So right now, the 111.37, the 112s are going for 240. Well, that's 2%. I like that. So I might do Dell on Monday. It all depends on a few things. Let's take a look at a seasonality to find out what does Dell normally do this time of year. We all seen this before. Here we go. That's where we are, right there. So basically, it looks like for the next 2 weeks, for the next 1 week, she's going to go sideways, tiny bit of a dip, and then she jumps back up again by the end of the month. That's historical performance. That is not guaranteed. That's like driving forward, looking in the rearview mirror. Well, this is what we did before. Okay? It's 11:32. Tomorrow is Sunday. Ooh. Oh, Sunday we get all hyped up for next Monday. Monday would be week number 8 for the 3rd quarter. Uh-oh, that was an interesting question. If the stock drops, the strike premium, is no longer above what you paid, what then? Okay. Let me give you my cow analogy. Okay? Because it's simple to understand. Hypothetically speaking, I buy a cow, and the cow gives me a gallon of milk every single day, or every single week. Let's say every week. Every week he gives me a gallon of milk. 1 week he gives me a half a gallon. Do I get rid of my cow? Or do I just say, all right, thank you for the half a gallon. Let's see what happens next week. Well, let's say next week he only gives me a quart. Okay, do I get rid of my cow? Do you remember rule number 1? Never buy something you do not want to hold on to long term. So here's the thing. Long term means long term. So what happens long term? Stocks go up, stocks go down. Stocks go up, stocks go down. Let's take a look at Dell. Okay. Look at that. Right here, she went up, she came down. 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 Up, down, up, down, up, down, up, down, up. Okay, that's all they do. They go up, they go down. So if you buy a stock, yes, it's going to go down. If you buy a stock, yes, it's going to go up. It's going to go up, it's going to go down. It's going to go up. So back to rule number 1. Never buy something you do not want to hold long term. So if you buy something and it goes down, well, you wait it out and you sell covered calls until it gets to your target price. Okay, so if I bought it here at 180 and it drops down here to 140, well, I will probably sell the 145s or the 146s or the 147s. Something far enough out where I'm still bringing in something. Okay, so I'm having some kind of cash flow while I'm waiting to collect the dividends that continuously increase. You can't forget those. Okay, but I want to collect something. So let's go here for a second. Let's take a look. Okay, the 101s are paying almost 3%. Almost 3. One strike out of the money is $2.40. So $2.40 is over 2%. Okay, the 113 is going for 195. Well, that's less than 2%. The 118 is going for 65 cents. Well, that's less than 1%. See, the further away you go from the actual stock price, the lower and lower and lower rate of return you get. So you're getting a gallon of milk. So you're now getting 3/4 of a gallon. Now you're getting a half a gallon. Now you're getting a quart. Now you're getting a pint. You're getting something while you're waiting for the stock that you like, that you want to hold on to for the rest of your life, comes back up again. Most people, not the people here, because you've now been enlightened to a different way of looking at things. But most people, they buy a stock and they hold it for 5, 10, 15, 20 years. What are they collecting? They collect a dividend every 90 days. Well, you're here, so you now know there's an opportunity to buy a good stock, collect a dividend every 90 days, and possibly maybe collect a premium every single week. So if you're going into a stock, okay, now you like the stock and it's one you enjoy having because that's the reason to buy it in the first place. You to collect a higher and higher dividend every year and share the profits. Well, great. The option's totally different because you can actually get a cash flow coming from the stocks you already own. And that's the idea behind the whole thing. So never buy something you do not want to hold on to long term. That's the way you should look at it when you're going into buying it. I like this company. I have no problem holding on to it for a long period of time. If I sell a covered call to get it and I can get an additional 1%, well, 1% every week, that's 100%, that's 50% per year. Okay, 2% a week is 100% per year return. Okay, so it all depends on what you want to do, but you have to face the realities of the game. Because all stocks do, they go up, they go down, they go up, they go down. So when you buy it, it's going to go down. When you buy it, it's going to go up. Guaranteed. It's going to go up, it's going to go down. That's all stocks do. They do not come to your house and make your bed, fold your laundry, and prepare breakfast. They don't do that. They go up, they go down. They go up, they go down. It's past 11:30. I'm going to breeze through these last couple of questions and that's it. Float, how are you doing? Uh-oh. Alrighty. I'm a redneck. I had to hold Siri 2 weeks with no premiums until I got something worth doing. Well, nothing wrong with that at all. Alright? Most people just buy and collect the dividend, that's it. Too funny. Hassan Pfeffer, how are you? I haven't seen you the past couple of days. Y'all share he is still says to say I. Okay. But that could cause you to sell for a loss if it goes up. Okay, KG, you're absolutely correct. Now, before I started this trading channel here, okay, I looked at the stocks once a day. That was in the morning. Well, now I look at it twice a day. So I have a good idea of what's going on with my stocks all the time. Okay, in the morning, I do the morning group. Okay, in the evening, right here, I look at it again. Careful with the greed factor. Hassan Pfeffer, you're absolutely correct. JB, fire content. Literally read a book at work at what he explains in one live session. Okay, I don't know if that's good or bad. Hassan Pfeffer, 1% is plenty. It is for me. Lay, is this stock options? Yes, it is. I missed that. I missed some questions. Both stock plus covered call. Thank you, Hassan Pfeffer. Covered calls, thanks. Do you increase the strike price when you roll? Now, I'm going to say this again. Fridays dictate what we do. Okay, now, we jump in. All right, in the morning trading group, we do most of our trades Monday and Tuesday. Wednesday, Thursday, we take a look at our positions and then discuss what we think the prior day or the next day is going to happen, preparing us for Friday. Because Friday, we want to take, all right, am I taking it into next week? Am I being relieved of it? Is it being exercised? Do I get to do it all over again? These questions are answered Friday afternoon. Brian, what's on your list for next week besides STX? Carlo, thanks James for sharing your knowledge. You're welcome. Getting to understand a bit about your strategy. Need to learn more. Mahesh, nice to see you again. Joey, I guess you don't let it sell at 147. You would roll it. You're absolutely correct, Joey. Way to go. Uh-oh. Redneck. Joey, yes. Out. Okay, yep. New York. Hey! New York Boutiques. Nice to see you back. I haven't seen you in the past couple of weeks. Any dividend stocks for dividend capturing to look at? Any suggestions? Okay. So, let's take a look. Tra-la-la. Okay, so we are in week 17th, which is here, which is week 7. So week 8, week 9, the first week of September. There you go. McDonald's, Nike, Halliburton, Schlumberger, SU. What the heck is SU? Is that Sunoco? So Suncor Energy. Okay, Suncor Energy. NEM, that's Newmont. QCOM, Bank of America, General Motors, and KHC, which we all know is Kraft Heinz. Heinz ketchup. Oh, I'm just about done. What about selling puts? Trader Kev, like the idea. I don't do it here. Here, simple, safe, predictable, consistent. If it ain't broke, don't fix it. It works perfectly fine just the way it is. On the price you want to buy. Okay. Sell puts, get hit the stock. Yep, got it. Covered call strategy. Google it. All right. So got done with all the questions. Awesome. Catch you guys later. Now tomorrow, same bat time, same bat channel. Bye to people on Facebook. Bye to people on Instagram. Bye to people on YouTube. Come on. Bye, you people on YouTube. Bye, you people on that one. Okay. Got it. Cool. Okay. Bye, all y'all. Now, for you guys down here, this is James from Dividend Stock Talk, brought to you by the 10-Minute Trader, where I buy and sell dividend stocks for a safe, predictable, consistent 1% per week. Have a great night. See you again tomorrow.